Not exactly the news you want to hear going into Christmas, but a new federal government report has warned that the price of summer fruits and vegetables is set to skyrocket in coming months by between 15 and 25%. The report found travel restrictions due to COVID-19, which have caused a chronic labour shortage, has left many farmers struggling to pick and pack their products. Coupled with recent Chinese tariffs, parts of the ag industry is in strife. But how long is this going to affect your shopping bills? I was joined earlier by Bureau of Agriculture Chief Commodity Analyst Dr Jared Greenville, one of the researchers behind the report. In terms of sheer volume, how will agriculture fare this financial year?
So agricultural production is looking pretty good overall for this financial year. We're forecasting a big increase in production, a 7% increase in total value. And that's on the back of Australia's second best winter crop, and for areas like New South Wales, our best winter crop. That's going to take the gross value of agricultural production up to about $65 billion for the year.
OK, but we've had some major factors that will influence where produce prices will sit this financial year too. What are the key factors?
Yeah, so it's not a uniform story across everywhere, and we've got a few disruptions on the cards. And so when you're talking about produce prices, the first one to note is horticulture. And so we've got some issues with the amount of overseas labour that's available for a number of producers. And as the sector gears up for its big summer harvest, starting in February, we would expect that given those workers aren't in the country, there could be some scarce labour around, and that would mean that fruit doesn't get picked, or vegetables, and that could increase the prices for consumers at the end of the day.
So what about the impact of Chinese politics and some of the sectors that have been impacted most, like barley and wine?
Yeah, so that's starting to weigh down on our export profile. So our exports are pretty good, and the biggest factor that's impacted exports is still the hangover from the drought that we've seen over the last 3 years. But also in that mix and our export performance are some of those trade tensions you mentioned. So China made a decision to apply some anti-dumping and countervailing duties, so essentially some taxes on our exports of barley, and that's going to really reduce our ability to trade with China, barley with China, and that's going to mean that our producers, even though they've got a big barley crop this year, will have to find other markets. And we're expecting those products to find another market, but it's going to be about a 20% discount on the world price as we have to go and find out those other markets at a lower value than what China was offering.
Finally, on the wine industry, will we see a discount war go on because there'll be about $1 billion worth of wine sitting in warehouses?
Yeah, so the $1 billion figure is how much they sell over the course of a year. So as that gets staggered out and we have some wine not being sold in a few months, they have a few options. They can look to some of our existing markets like the US and Europe and the UK. But there's a range of options. They can hold stock, or as you say, they can sell some more on the domestic market. Their decisions around, whether they discount it down to try and move that stock along or whether they look to hold, I guess we'll have to wait and see.
Okay, and have you factored in the likelihood of international borders opening before the end of the financial year?
In terms of our exports and our gross value of production, we've factored in those numbers really the continuance of what we're seeing now. So about an uncertain environment, about labour and people movements globally, and still that subdued demand for the high-end, high-value food products that people would be consuming out of restaurants. So we're not overly optimistic in terms of the forecast in that respect. But if those things did happen, we would expect our export value to be up a little bit higher, and potentially that would flow through to a higher total production value for the sector.
Okay, so in the meantime, grocery buyers should save a little bit more money for at least the next 6 months. Thank you so much, Jared, for your time.
No, thank you very much.
When you hear news of a report like that about prices at the supermarket, and when you think about how the vaccine's going to roll out, you should just put in your calendar July 2021. That's when we'll be back to near normal. We've got to be a little bit more patient, I think, until then.